Hi everyone, hope you had a great weekend, and let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the highest probability on the weekly time frame, which is this bullish scenario here, 1, 2, 3, 4, looking still for another 5. Common target for your wave 4 is the 236 to the 05, taken from the low to the high of 3, 57.1 to 42.8k, invalidation 37.7k. Target for your wave of 5 is between 81.3k and 129k. That is of course a very big target area, but based on local structures on a daily, 4 hour, 1 hour, 15 minute time frame, we can get a lot more specific. We just don't have the data yet. After wave 5, we are looking for a big retracement towards the downside. And if you want to know more about the targets of that retracement, make sure to click on the card popping up in the screen, which is a cycle analysis I have done last weekend on the monthly chart. Your bearish scenario is a unfinished 3-wave corrective structure, after which we then look for impulsive continuation towards the upside, where your minimum target would be the 0.618 trend-based fib extension taken from the start to the end of W to the end of X at 30.4k on a logarithmic chart. Because if I switch to the linear chart, you can see that this target has an incredible difference, because now we're at 43k. That's a 13k difference between the log chart and the linear chart, which is really big. Now the reason why generally on these time frames you like to use the logarithmic chart is because of the percentage moves. Bitcoin has moved towards the upside over 300%, and this move to the downside is like a 60-70% bear market. And you want to correct for these percentages, because 1% at 15k is very different than 1% at 60 or 70k. So therefore, generally the logarithmic chart is preferred on these time frames compared to a linear chart. But 43.2k does sound a bit more plausible compared to moving all the way down to 30k at the moment. And even 43.2k, not forget, is still inside the common target area for your wave 4, which we then do put on a logarithmic chart, because 42.8 here would be the 05, which is your common target area. So it is an interesting bit of confluence between a linear chart bear market target and a logarithmic chart bull market target. So at least something to keep in mind. Now the reason why the probabilities remain higher for the bulls is partly because of the local structure we have here towards the downside, which has a higher probability of being corrective, not impulsive. But also when we look at this move towards the upside here, if we do want to count this bearish, we have to count this as an ABC or WXY. And you can see that price moved very close to the 1.618 on a logarithmic chart, which is more common for a wave 3 compared to a wave C or a wave Y. And if I would switch to a linear chart, then you can see that price even moved above the 2.618, which is incredibly rare even for a wave C and a wave Y, increasing the probabilities for a 3. So that is still something that we also have to keep in mind. Now on the 4-hour time frame, we have had this move towards the upside and a retracement. We were waiting for price to move into the fibs, and what I mean with this is at least touching the 0.382. We didn't do that here, we didn't do that here, but we did do it with this move towards the downside. Now the 0.382 is a minimum target for most of your scenarios, ABC, WXY, 1, 2, 3, but it remains a less common target compared to your 05786. The first bullish scenario on the 4-hour time frame is a scenario where we could still move into the 05 to 786 area with the yellow line that we have over here. Now what you're looking at is a finished 1 or W, 2 or X, and we look for a continuation up in a 3 or a wave Y. Now if we are looking for a 3, you want to see 1, 2 continuation to the upside in a wave Y. You can also have an ABC and then a move down, but by all means you're looking for price to not take this low and move towards the upside first, taking out 63k, minimum target 64.6k. Your alternative here would be the bearish scenario, right? The yellow line, where we then have a 3-wave move up, look for a 3-wave move down. You do take the low, hit some nice support that we still have towards the downside. For example, here around 55k and even lower around 52k. And then move towards the upside in an impulsive wave C to then also still hit the minimum target at 64.6k, and we do have some resistance in that same area, as you can see, 64.6 to 65.3k. Another bullish scenario here is a unfinished WXY internally. So the blue one, WX, and then look for another Y and then a move up in a similar 1 or W, 2 or X, a 3 or Y structure. The difference here is that your wave X finished at this high. You're still looking for a wave Y to finish. And your wave X here is a running flat and then an A, B, and a wave C, which is very rare, never really preferred unless everything else fails, but it is good to at least keep in mind. And in this scenario, preferably you do take the low, move into the 05 to 786 pocket, hit some support, look for signs of strength, and then look for price to move towards the upside to take out 63k preferably. Now your most bearish scenario would be a finished WXY, a zigzag to the upside, then we have X and then a running flat in Y, but as explained, a running flat is very rare, never preferred unless pretty much all of the other scenarios generally fail. And also your minimum target for wave Y would be the 0.618, and we did not even get close to the 0.618, which reduces the probabilities for a wave Y to finish at this high and then look for a bigger wave 1, 2 and continuation to the downside. If this, however, is the end of your wave Y, then at a bare minimum you want to see an impulsive structure to the downside, which on the lower time frame means you want to count a wave 1, 2, 3, 4 and a wave 5, and the 0.618 is an invalidation for a wave 4, 59.2k. So in other words, you want to take out the low before hitting 59.2k. Now, if price does take the low, mind you that also in the other bullish scenarios that I have shown with price moving down, you can very easily get an impulse here, correction, and another leg down for a zigzag and then a move up. So just by taking this low, it doesn't increase the probabilities for this scenario. As the probabilities remain low, this is the end of a wave Y. On the 15-minute time frame, here in this range, we have touched an 886 here at the low, right? We made a low, the first wick, moved up, moved down, touched the 886. Good to be aware of this, as generally the 886 would increase the probabilities to still take out the lows over here. Now, when price then moves towards the upside and does hit the 0.618, taken from this high to the low, it invalidates a wave 4. In other words, the probabilities increase that this then is a 3-wave structure, not an impulsive structure to the downside, which increases the bullish probabilities on the 4-hour time frame as well. So that's something to keep in mind. If we look at the CVD divergences, then we still have the bigger bullish CVD divergence here on the chart, higher low in price, lower low on the CVD, and also here more locally, higher low in price, lower low on the CVD. However, what I prefer to see is 15-minute, 5-minute, 3-minute bullish CVD divergences building as price changes market structure and moves to the upside, which at the moment is not the case. As we are moving down bearish market structure, we haven't changed to bullish market structure here locally with continuous bullish CVDs, and instead we are still having some bearish CVDs on the chart as well. So you definitely want to invalidate these and have price move towards the upside with consistent support, meaning these consistent bullish CVD divergences. If we then finally look at the probabilities of the different scenarios, then on the weekly time frame, higher probabilities for the bullish scenario, wave 4 and 5, compared to the bearish scenario. On the 4-hour time frame, at the moment, the probabilities are higher for a bigger WXY to the upside, coming off the 49K low here, WXY, with then another move towards the downside, simply because of this individual structure here towards the upside. Your alternative is a 1, 2, and then continuation up in a wave 3, or a double 1, 2, 1, 2, 1, 2, and then a wave 3. But that all depends on then the next leg to the upside, as in both of these cases, you preferably take out 63K. On the 1-hour time frame, the probabilities here are also higher for the bulls, where we are looking for a WXY and then a move to the upside to take out preferably 63K, compared to the bearish scenario, which is either a finished ABC here and an impulse down. Didn't show this scenario in this particular video, but I did last week, and now I have a potential WX and then a Y alternative bearish scenario, still lower probabilities. The probabilities are higher that this move towards the downside here is a WXY complex structure since 63K, after which we then look for another leg up. Still mindful, however, of the supports towards the downside. First of all, local support 57.5, 57.8, local resistance 60.5, 60.7, and then we over here have 54.6, 55.2K, 52.3 to 53K. And then on the 15-minute time frame, the probabilities at the moment would be higher for price to still take out this very local low here because of the 886 touch we have locally, and we have at the moment still some bearish CVD divergences. Of course, the probabilities start changing if we actually change market structure, invalidate the bearish CVD divs, and see consistent bullish CVD divergences. Hitting the 0.618 also invalidates a wave 4, increases the probabilities this move down is a 3-wave structure, which in turn increases the probabilities to then still take out the high of this here move towards the upside. So I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.